Welcome to our deep dive. We're going to take a look at one of history's wildest financial crashes, the South Sea Bubble. Yeah, we're going back to 18th century London. We'll see how a company that promised riches from South American trade, well, it ended up bankrupting thousands of people.
We're going to uncover not just what happened, but why it happened. We're going to look at the human psychology of speculation. We'll look at the role of government. And we're going to examine how this centuries-old crash, it still kind of has echoes in the markets today, you know?
You gave us some amazing excerpts about the South Sea Company, so we're ready to unpack all the drama, and of course, all the intrigue,
Yeah.
and of course, all the financial lessons it holds. Some of these characters are unbelievable. I mean, even Isaac Newton is in this story. And there's this bookseller. He becomes like this hero who founds a hospital, all thanks to the bubble.
It's a captivating story. And it really shows us that history tends to repeat itself.
Okay, let's set the scene. So picture this, okay? London's Exchange Alley in the 1700s. Bustling coffee houses,
Oh.
not just for caffeine, okay? These were the precursors to the stock exchanges we know today.
Yeah. These coffee houses were the hubs of trading and financial speculation and all of that. And this is where our story of the South Sea Company begins.
Okay, so this company emerges, and they have these grand promises, you know? They're going to tap into the South American trade. Sounds
Yeah.
pretty good, right? But there's a catch. Spain, they controlled a big chunk of South America back then, and they weren't really interested in sharing.
Right, right. And that's where, that's where the seeds of the bubble were sown. You had this disconnect, the dream of all those South American riches. And the reality was that Spain was putting up all these restrictions, and that created the perfect environment for speculation to take root.
So how did this bubble actually, start to inflate?
Mm-hmm.
So the South Sea Company, it wasn't just about trade. It got all tangled up with Britain's national debt.
Right. So the government, they came up with this scheme. People could swap their government bonds, which were basically loans to the government, for shares in the South Sea Company. It was really clever, actually. They instantly created a market for the company's stock. And it tied the company's success directly to the nation's debt.
Okay, wait, so hold on. They had this monopoly on trade, but it was basically worthless because of Spain. But by tying it to the national debt, it suddenly seemed vital, right?
Precisely. It's all about psychology. People weren't just buying into a company, you see. They were buying into this whole story of national prosperity.
And that story was pretty convincing, because starting in early 1720, South Sea shares just took off. I mean, they went from £100 to over £1,000 in just a few months. So what fueled this crazy frenzy?
Well, it was a bunch of factors. I mean, you had this widespread optimism about South American riches. It was fueled by company propaganda. People were eager to believe in a brighter future. It's understandable.
Oh, I can just imagine. The coffee houses must have been buzzing, right? Everyone wanted a piece of the action.
You got it. And then you add in some political maneuvering. Politicians, they were given free shares to promote the company. It created this sense of legitimacy. Made it seem like a sure thing.
Oh, so some corruption mixed in. It's like nothing new under the sun, right?
Mhm.
But wasn't there also something about easy credit that really fanned the flames here?
Yeah, absolutely. The company, they let people buy shares with just a tiny down payment. They were basically borrowing money to invest so people could magnify their gains, but also their losses, obviously.
Leverage, a key ingredient in any good financial disaster. And to make matters worse, the company itself, they weren't exactly playing by the rules, were they?
No, not at all. The directors, they were lending money to investors to buy more shares. They were artificially inflating the price, creating the self-fulfilling prophecy.
Yeah.
The rising price attracted even more buyers, which just pushed the price up even higher.
So they basically created their own reality, and this reality had nothing to do with any real value.
Yeah, that's a good way to put it. The South Sea Company, they were selling a dream, and people, they really wanted to buy it.
It's almost like eerily familiar.
Yeah.
I mean, were there any voices of reason? Anyone trying to warn people about this speculation?
Well, there were some, but they were completely drowned out. The chorus of those promising quick riches, it was just too loud. It's a classic example of herd mentality. People see others getting rich, and they don't want to miss out.
FOMO,
Mm.
fear of missing out. But hey, not everyone lost everything in this bubble, right? I mean, there were some winners. Who were they?
Oh, yeah. Some people rode that wave to unbelievable wealth, and then there were those who were just crushed by the crash.
Okay, so let's start with the lucky ones. I heard about this bookseller, Thomas Guy. He made a killing, right?
Oh, yeah. His story's fascinating. He bought shares early, and then, maybe it was luck, maybe it was foresight, but he sold at the peak. He made a fortune. And then, get this, He uses his wealth to establish Guy's Hospital, which is still around today.
Wow. Talk about a rags to riches story.
Hmm.
From bookseller to hospital founder, all thanks to the South Sea Bubble. But, okay, not everyone was so lucky, right?
Oh, definitely not. Guy's story is amazing, but it was definitely an exception. For every winner, there were a ton of losers, people who saw their dreams just turn to dust.
And some of those losers were pretty famous, right? Isaac Newton, the father of modern physics. He got caught up in the frenzy too, didn't he?
Yeah, he did. And his story, it really shows us that even the most brilliant minds can fall prey to market mania. Newton, he actually made a profit at first. He sold his shares, but then he got caught up in all the hype. He reinvested near the peak, and he lost a ton of money. You know that quote. He said, "I can calculate the movements of the stars, but not the madness of men."
Yeah, it's a powerful reminder. We're all susceptible to the lure of easy money, right? No matter how smart we think we are. But the South Sea Bubble, this wasn't just about individuals winning and losing money. There were some bigger repercussions, right?
Oh, absolutely. When the South Sea Company crashed, it sent shockwaves through all of British society. It triggered a political and economic crisis with some far-reaching consequences.
Okay, well, it sounds like we're just getting started. We've got to dive deeper into the fallout. We've got to see the lasting impact of the South Sea Bubble. We'll do all that when we continue our deep dive. Okay, so we were talking about how the impact went way beyond, individuals winning and losing. So what happened when the party finally ended?
Oh, it was a collapse. And it was brutal. I mean, it was fast. September 1720, share prices just started plummeting. They tried to save it. They tried to prop up the market, but nothing worked. People just started selling, panic selling.
Man, I can just imagine. It must have been terrifying, You realize the dream you bought into, it's gone, just like that. What was it like in the streets of London?
Chaos. It was utter pandemonium. You had these crowds outside the exchange, and they were desperate, just desperate to sell their shares before they were worthless. And yeah, there were riots. People were angry. They were desperate.
So it's like society itself was just unraveling. What did the government do?
Well, they launched an inquiry, a full-scale inquiry. They had to get to the bottom of this, They had to see what the South Sea Company was really up to. And what they found was pretty shocking. It's a whole web of bribery and corruption, and it went all the way to the top.
So it wasn't just about bad financial decisions. This was like a deep systemic problem, like a rot in the whole system.
Yeah, you got it. Almost 200 politicians.
Yeah.
200. They were all implicated in the scandal. They've been taking bribes from the company. It was huge. It really shook the public's trust.
And this is where Robert Walpole comes in, right? The guy who becomes Britain's first prime minister.
Right. Walpole, he actually stayed out of the whole South Sea frenzy, but he saw this opportunity, and he was really skillful. He navigated all the fallout, restored order, and he emerged as this leader, the leader who could guide the nation, through this storm.
So it's like the South Sea Bubble. It accidentally created this, powerful political figure.
Yeah.
And it kind of led to a whole new political order. That's wild.
Yeah, you're right. Crises can do that. They can be these unexpected catalysts for change,
Yeah.
But the drama doesn't stop there. What about Robert Knight, the cashier who ran off to Europe with all the records?
Oh, yeah. The guy who took the books and just disappeared. What happened? Did they catch him?
Well, Knight, he stayed in exile for years. And because those records were gone, a lot of those corrupt politicians, they never faced justice. It's pretty crazy.
It's like even with a scandal this big, the people in power, they always find a way to protect themselves. But what about Britain? What happened to Britain after all this?
Well, the South Sea Bubble, it had a huge impact. It really changed their financial system. I mean, it showed everyone the dangers of unchecked speculation, and it made it clear that they needed better regulation. They needed oversight.
But didn't Britain, have other financial crises after that?
Yeah, they did. They did. Financial crises, they happen. It's a part of history, unfortunately. But the South Sea Bubble, it was like a wake-up call. It forced them to make changes. And in the end, those reforms, they strengthened their institutions. And, they helped pave the way for Britain's economic dominance.
So even though it was a painful experience,
Yeah.
it actually made Britain stronger in the long run.
Yeah, I think so. It's interesting, though, when you compare it to France, they had a similar bubble around the same time, the Mississippi Company.
Oh, yeah, the Mississippi Bubble, another cautionary tale. So how did France handle it compared to Britain?
Both countries, they faced huge consequences, obviously, but their responses were pretty different. Britain, even though there was all that chaos, They did what they had to do. They restored confidence, they implemented measures, to prevent it from happening again.
So they learned from their mistakes.
Yeah, they adapted. But France, they held on to their old ways,
Mhm.
and they had a hard time regaining trust. And it really hurt their economic development. I mean, some people say it contributed to their struggles, for years to come.
Wow, that's crazy. It really shows how a country's reaction to something like this, it can have consequences for, like, generations.
Yeah.
But let's talk about the people. We've talked about the winners and losers. But what about, like, the average person, the people who were just caught in the middle of all this?
The South Sea Bubble, it wasn't just some abstract event. It was a human tragedy. I mean, thousands of people, they lost everything. Their savings, their homes, their livelihoods. It was devastating.
I bet there are some incredible stories, some really heartbreaking stories from the people who lived through it.
Oh, absolutely. Their personal accounts, they really paint this vivid picture. It shows the real cost of, financial recklessness and the ripple effects, how they can last for years.
It makes you realize that behind all the numbers, all the economic theory, there are real people, and their lives are changed forever by these events.
Okay, but let's shift gears for a second. Why does the South Sea Bubble even matter today? It happened like 300 years ago. That's a good question. The world is a different place, obviously, but the things that drive financial markets, those haven't really changed that much.
So what you're saying is the South Sea Bubble, it still has lessons for us today.
Oh, yeah. It's a reminder, a timeless reminder, about the dangers of speculation, the allure of easy money, the fragility of the markets. It shows us how important regulation is, transparency, informed decision-making, all of that.
And those are all important lessons, especially now, right? I mean, look at what's been happening in finance lately.
Exactly. We've seen so many bubbles, the dot-com bubble, the housing bubble, and now crypto. And in all of them, you can see echoes of the South Sea Bubble, the irrational exuberance, the manipulation, the crash.
So you're saying history doesn't repeat itself, but it rhymes?
Huh? Yeah, that's it exactly. By looking at these historical events like the South Sea Bubble, we can understand,
Yeah.
We can see the forces that shape these markets. And maybe, hopefully, we can learn to avoid making the same mistakes.
It makes you think. We might have all this technology now, these complex financial systems, but human nature, that's still the same. We're still tempted by the same things. We still make the same bad decisions.
Absolutely. That's why history is so important. We have to learn from it. We have to see these patterns, the booms, the busts, and we have to approach these markets with a little bit of skepticism, a little bit of caution.
Okay, so it sounds like we've learned a lot from this. We've explored the South Sea Bubble. We've seen the history, the psychology, how all these markets work. Let's keep talking. Let's look at the specific connections between then and now. We'll do all that when we wrap up our deep dive. So we went all the way back to London in the 1700s. We saw the South Sea Company, the rise, the fall, all the chaos that came after. But now, it's time to wrap up our deep dive. And I really want to focus on, what does this mean for us today?
It's tempting. It's easy to just think of the South Sea Bubble as this, ancient history, a warning from a different time. But what we've seen is that the parallels, they're still there. The same things are driving our financial world today.
Yeah, we talked about some of those parallels, but can we, really get into the specifics? What are some examples from recent history that really connect with the South Sea Bubble?
Well, the dot-com bubble, that's a perfect example. Late 1990s, it was crazy, all that speculative frenzy. People thought the internet was going to change everything. And investors, they just poured money into these tech companies. The valuations were insane.
Yeah, it's like that same irrational exuberance, right? They weren't looking at the fundamentals.
Yeah.
So what happened when the bubble burst, I mean?
Same thing. It was fast. It was brutal. A lot of companies, they just went bankrupt. Investors lost a fortune. The whole tech sector, it had to, reset.
History rhyming again.
Yeah.
Okay, so what other bubbles, in our time can we connect to this?
Well, 2008, the financial crisis, that was a big one. The housing market, easy credit, all these crazy financial instruments. People thought housing prices would just go up forever. It was a recipe for disaster.
And that one went way beyond, people losing their savings.
Oh, yeah. It was global. It triggered a recession. People lost their jobs. Governments had to bail out these financial institutions. It really showed how connected everything is.
Yeah.
And how fragile the system can be.
And even after all that, it's like, we still haven't learned, have we? I mean, look at crypto.
You're right. Bitcoin, Ethereum, all of that. It's been a wild ride. The prices, the volatility, it's all classic bubble behavior. Social media hype, the promise of getting rich quick. It all drove those prices way up.
It's like the South Sea bubble all over again. There were people warning about the risks, but they were drowned out, right, by all the hype.
Exactly. And then the correction. It always happens, and a lot of people get hurt. It shows you, even with new technology, new ways of doing things, human nature, it doesn't change.
Okay, so what can we do? I mean, how do we navigate all of this crazy financial world and not make the same mistakes?
Well, first we have to be aware. Bubbles, they happen. And history can teach us a lot. You know, how they form, what happens when they burst.
So we have to actually learn from history,
Yeah.
not just like know it happened.
Yeah, we have to see the patterns so
Yeah.
we can recognize the warning signs. We have to be skeptical, do our research. Don't just follow the crowd.
Be critical. Think for yourself. That makes sense. What else, though? Like, what can we actually do to protect ourselves?
Diversify. Don't put all your money in one place.
Right.
Spread it out, different assets, different sectors. It's about managing risk.
Okay, good advice. What else?
Patience. Be disciplined. Don't try to time the market. Don't chase those short-term gains. Think long-term. What are your goals? What's your risk tolerance? Build a strategy around that.
So it's about, like, being smart, not getting caught up in the hype, playing the long game. That's great advice.
And remember, even though the South Sea bubble, it was a long time ago, it still matters. It teaches us about these forces, you know, the rational and the irrational, the things that make these markets move. If we understand that, we can make better decisions. And maybe we can avoid repeating the mistakes of the past.
Well said. Well, that about wraps it up. Thanks for joining us on this deep dive into the South Sea bubble. It's been a journey. History, psychology, the markets, it's all connected.
It's been a pleasure.
And as always, keep the conversation going. What do you see? What parallels? What lessons? Let us know. On social media, our website, wherever you find us. And until next time, stay informed, stay curious, and, after today, stay skeptical.